Yeah, so I'm just gonna get into how I kind of look at things. So normally when I start off and I'm looking to make a decision, I always start off on SPY, and I usually have one, two, or three screens kind of going at any given time. Maybe not more than that because it just gets everything gets a little confusing after that. So I kind of just keep things simple, and sometimes I just keep it at two. So it really just depends on what's going on. What the fuck is that? Let me just hold on. What is this? Hold on, let me get my pointer. Can't even figure this out. What is that? That's annoying. It's like a check mark. Hold on, let me see if I can get rid of that. Let me reload. Oh, I know what that is. That's Zoom. That's what that is. It has a stupid if you want to like, I guess, circle things. I'm not really familiar on how to get rid of that though. I don't know, whatever. We'll just go. So let me just put it here and kind of give you a sense for what I would be looking at. So first of all, just for clear and understanding, this is TradingView. I use this, and tons of other marketers use this as well. Just as a platform that kind of makes your execution decisions. There's a lot, like depending on whatever broker that you're using, they have their own version. I don't think if Swim has a good version of this, and I know that Webull has it as well, and some people use it, but I just learned off of TradingView, and it's just easier for me to execute. So that's kind of what I use every day. All right, so in TradingView, what you want to do is you always want to look at time frames when you're kind of making the decision on which way the momentum of the trade is going at any point in time. And first of all, we start with the weekly. So this W right here starts with weekly. You have daily, 4 hour, 1 hour, 15-minute, 5-minute, 2-minute. And depending on your level of comfort for executing in and out of a trade, you can definitely the time window that you're looking at becomes a lot shorter. So personally, I'm a day trader, so I'm not looking to hold trades overnight. So I'm never really I'm not really swinging trades based on what might happen in like 2 weeks. Like right now, if you're looking at this, this stock, this is SPY, and you see this trend line, you say, okay, this is going up. It hit this, it based right here. It's going up, base right here. My projection is like in, I don't know, 10 days, 5 days, whatever, that it'll reach this top. So I'm going to hold it. I don't do that, right? But some people do. That's how they do their day trading. In this market, the volatility is just crazy, and holding something overnight, you can be up 10%, at the close, and by the time the next day happens, you can be down like 70, and you're just like, what the fuck happened? So I really, stay away from swinging overnight unless it's like a play where it's 3:55 in the afternoon and the market's about to close, and I see a potential direction in what the market's going, then I'll hold overnight then for the anticipation of selling the next morning. And it's definitely a gamble in some ways, but it's done strategically. But I don't recommend that if you're just getting started, because you can lose. You have to be prepared to lose everything on that one particular trade. And if you're just trying to grow your account, it's not conducive because there is elements of chance to it, but at the same time, strategic chance, right? Like you're operating with probability. Anyway, getting back to it. Yeah, so I'm not swing trading. The way I look at things is normally just in the daily time frame. When I'm making executions, they're based on 5 minutes and sometimes 2 minutes because I don't plan to be on the trade for longer than ideally a minute if it's a good trade, or up to an hour. And on average, I'm in and out of a stock for maybe 5 to 10 minutes. That's the idea. Like I anticipate there's a momentum move, there's a play that's about to happen, and I want to get in. But so that's just the way in which I trade. But anyway, so what we start off with is the weekly, and this is going to determine each bar that you see is going to determine a week. So this is 1 week. So this is a 5-day trading window. This is 5 days. This is 5 days. This is 5 days. This is 5 days, and all the way up. So this just gives you the overall strength of the market, factoring in days of volatility where the market might have crashed and went down quick. you know? So if you look at this trend line right now, we were in a downtrend. So when this line broke, where would you say? Let's say right there. Right. So yeah, so when you want to make a trend line, you want to make sure there's at least 3 touches, right? Or very, very close to 3. So we have 1, 2, 3, 4, 5. 5 touches. And even more so, we can kind of look up here. Because this is when the price of the stock was like continuously rising. So you have 1, 2, 3, and then this kind of broke. This is kind of an indication that it could be heading in a downward direction, and you keep moving the line every week just to see if there's a bounce, and if there's not a bounce, then you can kind of confirm that the price is going down. So ever since this line broke, what month was this? Hold on, let me get my what month? This was May 2022. So May 2022, that's when prices were definitely dropping, and we're not just expecting an uptrend. And this is when there was kind of this uncertainty in the market. Everyone's like, oh, price is dropping, and it really did, right? So it comes back to October and it kind of hits its very bottom. And as you can see right here, it starts to bounce back up and rally. But in order to indication that it's actually an uptrend, it's got to be higher highs. So this is still a lower high. And so a lot of anticipation in December was that it was going to go lower. Price actually held and continued to go up. So now we've hit a peak, and now we hit a low, and now it looks like we might be going for another high again. Now, why do we anticipate that the price may be going in the more bullish direction? Well, first of all, Friday was fucking crazy, right? Price, if we go into the daily chart. No, actually, let's go to the 5-minute real quick, because that's really where you see the insane move. I think it was like I don't even know, what is it? Hold on. Right here, the top 4 came here. 3. So the market moved up 5 points, in a matter of one day, from this position. And I got a really good trade in coming off the open right around here all the way up, which was awesome. But obviously with trading, there's no way to like when you're in the moment to know that this is going to happen, right? I definitely would call myself a genius if I say, yeah, of course it was going to bounce here and then just go all the way back up here, and I held. But that's bullshit. No one knows that. You can only anticipate based on market movement by getting back into trades if you see some kind of an indication. Anyway, so the price, going back to the weekly chart, we can see that first of all, this you can see this bullish candle right here. This is almost a pin bar. And this pin bar, if you look, now we're going to start to get into the nits and grits of things. You can see if you draw that right here, this line, that this is going up, right, off of a support line, right? Now, this is where we get into kind of supply and demand, right? So as you can see, if we look back on May 21st, May 21, right? So almost 2 years ago, almost. You can see that when price came here, what happened? Another bullish pin bar, which means that there was buyers. I mean, look how crazy this wick comes up. This almost turned green. I mean, God. And then look, and then you see another one. So you see 2 indications of a bullish pattern indicated from here. So now what you can do is you can draw a support line in that area because there was a lot of noise. And if you follow the movement of this activity, you can see that price doesn't really stop going up until this level, right? Before it rejects again. So that would be the demand. I mean, that would be the supply. I'm sorry. Did I say this is supply? If I said this is supply, I meant this is the demand. This is the demand zone right here for this level. And this is the supply zone, which means the price eventually has to come down. Simple economics. Too much too much supply, demand drops, and then the price goes down, too much demand, and the price goes up, right? So we're at the supply zone right here. So this is on the weekly chart where I would draw my supply zone, right there. Okay, so red indicates there is I would say a rejection opportunity, right? So that keeps my eyes peeled for that. But this is on the weekly, right? And again, I don't make decisions off of what's going to happen in a long period of time, like in the next, like, I don't know, week or two or whatever. But this is just a really good indication that when price does come back to here, no matter how bullish everything seems, remember, a very important thing is what comes up must come down eventually. And why did we say it comes down? Well, first of all, after this massive rally, how many weeks was this? 1, 2, 3, came down a little bit, 4, 5, 6, 7, 8, 9, almost 20 weeks, right? Of a rally up. But then what happened? It came back down. Then it bounced over here and then came back down and then came back up. And then all of a sudden, price comes back down, rejects off of here. I'm not going to put this as my supply zone because, that would be I could, but I would wait. I would assume or anticipate that there would be a rejection first at this level before it goes over here. So I wouldn't even make my zone there. And as you can see right here, as price bounces, look at that. You can see it wicks up, right? So a lot of people who went bullish thought it was going to keep riding, and then they got choke slammed all the way back down here, right? And then again, a little bit more bullish momentum, and then choke slam all the way back down. And now this price is now declining rapidly. It literally drops over here. So this is why you have 1, 2, 3. How many touches? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost 12 touches. So 12 touches in this area of something good happening, but mainly something bad happening. So this is why I have confidence and strength in this level. So now that the price has done that, we can feel confident that whenever it does get up here, we can look for a rejection at this level and feel comfortable about doing it. Same thing about down here, which is really what we're going to be focused on, which is a green, right? This is indicating the demand zone. So we draw our lines here and say, man, and you can see this pin bar in this area. So let me just draw a hard, draw a line. All right, so now we see this is the demand zone. Why? Because how many touches? There's a lot of activity. You have 1 touch, right? And it explodes off that level. 2, 3 touches, explodes off that level. Price tried to come all the way down. So if you were going bearish on this, you would think, okay, the price is going to keep going down. All of a sudden, buyers stepped in, jolted the price back up, and now we stop at this level. Now price did not continue. It came back down, and then it broke, but then it came back up. So this is a very key level. And as you can see, when the price did drop and come back up, what happened? It eventually bounced right here off of this 392.61 zone. And then it came all the way back here before it rejected again. And so on and so forth. So now, today we are right here in this 392.88 zone, which is why price skyrocketed, right? Because there was a ton of buyers in this area. So now that we know that this is, our weekly demand zone, the next thing we do is we go into the daily, okay? So the daily is now where we're starting to really start to look for our move and our plan, right? So this is the indication of what happens every day. So this bar right here was on Friday. And if you even look back, if you had looked on Thursday, right? And if you had saw this bar, this is why I was bullish when I came off the open, because literally price just bounced off of here, stuck. So if we just did a replay, right, and we got rid of that, you could see that this is Thursday. So if you're looking at this and you see a pin bar here, price refused to go down here, your indication for what's going to happen tomorrow is this is looking like the price is going to continue to the upside. So that's why I had that anticipation of going a bullish off of the open, because it was right here. And usually when there is a bullish move the previous day, you always look for continuation. So there was continuation. There was a bounce off of a place of demand. And that's why the anticipation was to go that way, that direction. Okay, so now we're here, and you can see it a little bit more clearly. And now what we're going to do is, let me take this off of, yes, take this off of there. And there you go, right there. So then now when I'm starting to actually draw my zones for the coming day, which is tomorrow, I'm going to start looking for my entry points or my supply and demand zone on the hourly charts. So the hourly charts, you want to kind of treat the same way. You want to look for when price reject. You want to look where price bounces. And you're looking, now again, keep in mind, this is weekly. So it's a lot bigger than I would want to make an entry, because if the price goes down, I'm not going to wait until it goes from, 390, let's say 398 all the way back to 392. That would be insane, because you would definitely go zero at that point on your option contract. So you want to look for a more favorable entry to your price, or some kind of pullback. So for me, looking at this chart right now, I would say that this would be a great level for a pullback, right? And a pullback just means that price is exhausted a bit, and we're going to get more sellers some people who are, who've been in this trade since here. Now they want to take some profits. Now they're going to want to sell. So obviously the price isn't going to, there's no obviously anything, first of all, but there's a probability that the price is going to at least come back down. And what do I say it's going to come back down? I would say to this 401.71 level, right? So what I'm going to do is I'm going to put a green line dots right there. Because why? Well, we have 1 touch, 2 touch, 3 touch, 4 touches. Where first of all, there was a rejection, there was a rejection, there was a rejection. So that means this was a great level of a rejection, and that's why you could hit this rejection every time for the past few days and be confident about it. But since now price is broken out of this, so now we're looking for a retest, and this is where the price is most likely going to retest. And why? Well, simple. If you look at this candle, you always look back. When in doubt, look back, right? You can see that there was a massively bullish reaction to that level. So I'm going to be looking, to enter in that area, right? Somewhere in this level, this area. I'm still not 100% with that, as being that this from 402 to 401, but I like the area just because you can see a little bit of confluence at 402.53 and 402.53 there, right? So I'm looking for price to kind of come in this area, but literally not go below here. If it goes below here, in my mind, the trade has failed, and I'm not gonna risk any more money to see if that actually would turn around, because that's how you get hurt. That's how you get in trouble with your trades, when you hold longer than you should. Even if you end up being right, but if the price goes too far down and you're down 40%, it's hard to recoup that, because now the price has to go up 80% just for you to get back, to where, is a level of profitability. So it doesn't necessarily make sense to hold on long, even if you end up right. It's always better to exit the trade and re-enter the trade, so that you can then profit and then take care of that previous loss, because you always lose in trading at some point in time. It's just how you lose. And if you lose effectively, which means you mitigate your risk, and then you win strategically to wipe out the risk, that the loss that you previously had, so you can continuously grow your account. Okay, so this is where I would put my bounce levels. Now let me just get a little bit more targeted on that level, because obviously the better the entry, the more profitable you're going to be. So I'm looking, this is where and this line is where I put my hourly. So if I'm looking for a bounce, I like this level right here. I really do. And the reason why is you could just see that there was a lot of consolidation, but no breaking of this level. So I really like this level here. And let's see. I also like, I want to bring this up a little bit more to probably right there, right? Hold on, let me just look more. Because all you're really doing is looking for where the most activity is happening, where the most, you know, where the most price action is going on, and then you want to keep your stop losses as tight as possible. See, I like this level, right? It's a lot of activity here before it went up and down. So let me get rid of, I'm going to move this up right there, right there. Right. So I like this a lot. Right. So the price comes back down here in this area and does not break beyond this. So now I'm going to start adding my alerts. Right. So 402.53. Look at, I would say supply zone, demand zone between, I would say demand zone 402 to 402.53. All right. So that would be where I'm looking for the retest to happen. It may not come here. And see, this is the hardest part about trading when you post signals, because it may not come here. It may only come like right there, but you got to really be able to determine if there's buying pressure of some sort before you make, if you decide to enter a little bit early, but really you want to let price come to your area. So you got to really wait. You got to be patient, but there is some time where you got to use intuition and get in. But that comes with experience. And when you're getting started, I'd much rather you wait for the price to come down to the area. And if you miss it, but and be able to live with that versus trying to get in and then coming in too early and now watching your P&L go down because you came in too early. Like you really have to have this level of, I guess, yeah, I would have to say intuition to really understand whether or not it's going down and not just guessing because it looks like it's going up. Like it's hard to explain. You just got to do this enough and it'll kind of kick in. Anyway, so when price bounces in this area, and I'm going to look for a signal before entering into the trade, my first target is going to be 403.25, right? 403.25. And then my next target will be this level of structure right here. My next target would be right there, right? Where is it? Right there. There you go. And that would be 404.46. So target 1, 403.25, and then target 2, where is it? 404.24. Target 404.24. Right. So that would be my next target. And the reason why, well, very simple. As you can see, this was an area where price rejected. So you have one touch there, one touch there. And let's see if you have another touch. Oh, there you go, right? Another touch. So you have 1, 2, 3, 4, 5, 6. There's a lot of touches, right? You get the point. Now, you don't have to wait to the very, very, very end of this. Like what I do is I usually look for the extra, I would say the extra bars that are right here, and I would just kind of draw that. So my understanding is at some point in this area, we're probably going to reject or something's going to happen that might cause my awesome trade that I got in here to now come down maybe a little too sharply. So I'm going to not, I'm going to exit there, right? but that's not really my main rejection zone, right? My main rejection zone would probably be in, let's see, I'm really just looking for price to have and actually this, let me see. Yeah, so here, this was a really hard level, but see, we're already, the problem is, at least from the post market, we're already kind of out of it, but we don't know what's going to happen pre-market because the price could just go like that, right? And if it does, then this is a valid rejection zone. So it's kind of hard to know. And best thing I can do is wait for pre-market to make that final decision on whether this would be my hard stop for a supply zone. But just going to draw another one just in case price, because what also could happen is price can continue up, right? It can keep going, bulldoze right through here. And now this could end up being our new bounce zone, right? This could be our new demand zone where there's going to be a break and retest at this level, right? So we got to watch out for that. And this is where just reading what's happening with the market really comes into play. So I'm looking at, let me just go back to my hourly. So we go back to the hourly. And as you can see, this is really right here. Wow. So if we go bullish tomorrow, even more, which I anticipate that we should do just based on what's been happening. Okay. Okay, that's fine. I have to. Yeah, so based on what's really happening, I can anticipate that, you know, price could potentially go from 404 to 408. You know, just I like to use whole numbers when we're talking about rejections. And 408 is a great psychological indicator that, you know, something might happen. So that's really where I will look for a major rejection at this point for the price to start coming down. Another target after this breaks here, I would probably be looking at right around here, right at that 405.99. But let's just call it 406 because, again, another psychological number. Okay, so there you go. So now I've set my targets. I know exactly what I'm doing now for tomorrow. I know that I'm looking for a retest in this area for price to go back up here. And if that doesn't happen, if price doesn't come down and price comes up, I'm looking for a retest in this area, right? At this level, this 404.12 versus, you know, this 404.54. And then if it does retest, I'm looking for it to go here at 406. And then after 406, if price breaks, I'm looking for, and if it continues to find, this keeps going up and up and up, I'm gonna be looking for a rejection right here at 408 to 408.48. So now you can see where, you know, I'm getting my numbers from. You can see why I'm choosing these numbers. I'm not just pulling these numbers out of my ass. You know, it's all based off of, you know, price action, what's happened in the past. And now I have a solid plan for tomorrow. And then you do that same thing for any other stock that you want to do. I always just do Tesla. I'm sorry, I do SPY first, and then I'll look at the other supporting cast members like Tesla, Netflix, and whatever, and determine how I'm going to get into that trade. All right, so that's it. That's how I'm setting up. That's my plan, and yeah, that's what we got. All right.
Yeah. No, all right. You know what's funny, man? Like in that class that I was taking, the dude's kind of like he directed me to like a guy on YouTube. You know what I'm saying? And the guy does like similar things, and for any given trade, he's using three charts. He's using, I think it's the daily, the 15-minute, and the 1 minute.
Right.
You know what I mean?
Yep.
And you know, he's using the 1 minute not to trade, but to peg where it's running the 15-minute. You know what I mean? And then